over like I think it's like over the last 2 weeks now, we wanted you guys to just like start creating your trading plans, just to like just to make you more accountable going forward, and just to make sure you've got everything you need in trading plans. So today I want to show you like how I've constructed mine, just so you can see like how many things are in here. I'll I'll go through it. I'll go through most of it, I think, anyway. But I don't want to send you it just so you don't copy it. But I just like want you to get inspiration from it, basically. And then if you have any questions at the end, I can send you like basically the key areas I'd want you to have in your trading plan in general, just so you're accountable basically for what you're doing at all times. So first of all, I got a little cheesy quote from our favourite guy, main man, Tom Dante.
Big up, Dance.
Yeah, exactly. Which just when I was writing it, I was like, oh, I just need a quote at the start just to keep me going. Which is actually very true because I feel like if you don't do whatever it takes if you don't do whatever it takes, you're not going to get to places you do want to get to. So this is a thing that especially applies to trading. So
before we start as well, just bear in mind for the whole of this that you're probably looking about 90% of traders in the world do not have a trading plan, and
yeah,
pretty much 100% of those are all retail traders. So whenever they come out with these statistics of 95% of traders lose money, blah 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 blah, the majority of these guys do not have plans. Because
it's
it's very
something.
easy to fail when you haven't got a plan. But what's the famous saying? Prepare to fail to prepare, prepare to fail.
Yeah, exactly.
It couldn't be more clear cut.
Yeah, it's just accountability, and it enables you to stay mechanical when you're trading. It eliminates that psychological factor of, oh, what if this happens? Like, I'm all right to trade this now. If you got everything covered in your trading plan, then you eliminate that emotion and you stay as mechanical as possible. Saying that, like, I do like to go over it every 6 months. So this is an updated version now because we started trying a new strategy, the QM fractals, what Key's been doing on M1. So I've kind of like started adapting it to that as well. It doesn't have all like the strategy to SFPs and the levels because that's immense, but it just has key things that I always refer back to if I do forget something, because I still like forget things at times. But most of the time, I don't look at it often. It's just when I need to like look for specific things or actually change specific things. So, Jesus Christ,
Luna's going nuts, isn't she?
I know, yeah. So let's say I'll look over my journal for the last 2 weeks, and then I'll find, oh, SFPs have been reacting differently. Like here, my level's been reacting differently. I might go into the trading plan and actually change it just based on like, the market conditions, which, as you know, this year has just been quite horrible. So just to start off with, I would just like to start with my motivations in general, like why I want to get into trading, because at the end of the day, that's what's going to keep you going. So I can't remember what I've got in here. Yeah, well, it's just obviously it's the money aspect, and I feel like now I'll probably adjust this because of the thrill, the general thrill of chasing the markets and wanting to be better than the big banks, the big hedge fund managers, and just all the big traders basically in the market. It's something that keeps me going. And when you get up in the morning, you're like, oh, let's see what the markets have done today. It's just something always there, something in the back of your mind, which on the shit days when you lost 10 trades in a row and you feel like, oh no, I'm not going to do this anymore. You just look back at this, you're like, you know what, it is actually worth it.
Having said that, if any of you trade more than 10 trades a day, I'm going to chop your hands off.
Yeah. So my mission statement is once again something what's the word I'm looking for? Something I want to be held accountable to. So just to pick an example, I only look to place high probability trades when I've back tested them and I'm confident in probability of success. I'm not going to go out there test the strategy I haven't back tested myself, purely because I want to be confident entering a trade. Because if I enter a trade and it starts going against me, I don't know how that trade's going to react. I don't know which if it's going to hit my stop, if it's going to go to target. I'm literally stood there looking at the market, sat there looking at the market, thinking, oh shit, which way is this going to go? I have no idea. Whereas if you go in and you back test things and you forward test, you have those statistics in the back of your head. You know which way it's going to go, which way is more likely to go, which pairs are more likely to stall. So it's something that ensures like the impact of your edge is the greatest, because you have backtested yourself, you know how it reacts and how it reacts on certain pairs. Something we're doing with the new strategy, which Kieran would probably say it does take like a long amount of time, but it is worth it because you're just certain of those outcomes. You're not sitting there around waiting, as many retail traders do. They just wait for the beautiful 3-to-1 risk reward to come in and do nothing in between. As well as something else I want to point out is the last point is to constantly evaluate my trading performance through my journal. Like Key will tell you how much like I'll maintain my journal and just always look into it just to maintain my edge, basically, especially this year when the market's just been all over the place. And last week, the election with the FOMC, the NFP as well, it's been like has been horrible. It's been a good week, but you do need to like just go back and look when things aren't going your way, and even when they are, just to see how we can maintain like your best performance all times.
Yeah, I think you are very much. I mean, I care about it, and obviously I'll review myself and stuff. But you are very on it with the self-analysis, and
I feel like
sometimes I'll let that slip for a week or two or for a couple of days. But you are very on it, which is why I wanted you to lead this more so than me, because you are so on it with this sort of stuff.
I feel like it's just I like my probabilities, and like if I enter a trade, let's say on a pair I've been trading a while, like CAD JPR for example, a level trade, that level trade's not going anywhere. I want to know, like, all right, how likely is it's going to stall for like 5-6 hours maybe? Looking back at my journal, because if I know that, I'm just sitting there more relaxed. I'm not stressed. I'm not looking to exit early. I'll trust the trade because I know it will go in my direction. So I'm always like looking for those probabilities, because that's what the game is about. Like at the end of the day, it's about probabilities. So trader type, what me and Key consider ourselves is intraday swing traders. So we rarely hold positions overnight.
I'm a scalper now, bro.
Oh yeah.
I'm an EU scalper.
1 minute scalper. Intraday day traders, but we are leaning towards like day trading.
Yeah.
Purely because doing FTMO, it forces you to day trade because you have to reduce your positions when you hold them overnight. And yeah, it's just something we know we're gonna do in the future anyway. So we thought we might as well start day trading now and start learning properly now.
I don't think you can swing trade in current conditions anyway, and I don't think, me personally, I don't think you can make an income and a consistent living off swing trading. If you talk, the man's pushing his teeth.
You're right. I'm fucking boring you, mate. It's man.
Me personally, if you're swing trading for a week or so, I think unless you've got a really big sum of capital that you're trading with, I don't think you can swing trade for a living. I just don't think it's possible because it would be up so much. I just think a lot of positions come back, and especially in volatile markets like we're in now, I just think it takes a lot more precision and knowledge to day trade and scalp. In fact, a funny comment I saw before, James Watts put on his story, someone was asking, like people was asking him questions, and someone said, "What's your opinion on scalping?" And he said, "Scalping takes no skill whatsoever. If you don't swing trade, you're just gambling." And I thought,
what?
I was like,
that doesn't make any sense.
It's kind of the opposite way around.
Yeah.
Yeah.
You know what? Whenever he asks me a question, without fail, I send, "Do you still back test?" Never answer. Never ever.
And I guarantee he ignores it every time.
If you look at his brother's story today, he's filming round on the boat that James is on, and I'm sure James in a blue shirt led over the seat on the boat, and he just looks like a mess.
Let me have a look.
Like, he's a big lad, like
What's his brother? Tom Watson?
Tom Watts, yeah. Because
Just-
Tom started out trading as well. So if you scroll back through his profile,
Can you show it to the screen, please, so I can see? Please.
Drew, go to the fucking toilet. Go and brush your teeth, man. Come on. Do it in your room.
Well, I don't want to miss out on key information.
Nah, I like that, to be fair.
I mean, next thing you know, he's having a shit, man. I swear.
this one here. You gotta hold it. Look at the state of that.
Oh Jesus!
Oh, no.
Yeah. I was getting it up, but it's kind of like I just missed it. Okay.
I think that's James. I'm sure it is.
Nah, it is. Yeah, it is.
Dirty, isn't it?
Yeah,
Like,
scammer. I hate him.
All right, calm down.
Nah, I don't hate him. He's all right.
right.
All right, moving forward.
Carry on, yeah. We digress.
This is something that will basically make up your whole trading plan. It's where you define your own edge and what makes you better than 95% of retail traders, because as we know, 95% don't make any money. So you want to be in that 5%. So obviously your goal, your edge might be different to mine, and most of the time will be, but it's something, once again, you want to look at it from like a third person point of view, because you don't want to repeat what everyone else is saying. Like, I am disciplined. All right, how are you disciplined? So here I said I'm disciplined enough to sit on my hands all day waiting for the highest probability setups to marinate themselves. As you know, Key and I won't bombard you with setups every single day, because it just doesn't happen. That's not like how the markets work. And we could send you loads of setups, but we're not going to send you setups. We don't intend to trade, because that just defeats the whole point. Like today, we're struggling to find like a good setup for our Instagram post, just purely because there's nothing that we like enough to put out there and for other people to see.
Yeah, you got to remember, for us, our setups are what people base our respect us off, basically. And if we sent churning out crap every day, because we don't sell signals, I think if we sold signals it wouldn't matter, but because we don't, people judge us on our knowledge and our setups.
And because we don't have 50,000 trend lines
Yeah.
on our charts as well, then
Yeah.
You know that guy I keep sending in? He put one up last week on a Saturday. Like, he just put his, like...
crypto must be crypto in it.
And it was like, are you for real? Like, his screen was massive as well. It's like a big curved computer screen.
Who's that?
All the gear, no idea.
That's that George...
Oh, yeah.
Or
George
owner,
Linked.
so FX in it, the owner
Yeah.
of that bastard. This is something people won't actually have in the trading journals. I don't think I've never seen anyone really talk about this apart from Tom Dante. So here, like you outlined, it's like keep 2 to 3 weaknesses. So, for example, I know you shouldn't risk more than 3% on any setup anyway, but we look at it differently. So we tried high probability setups with higher risk, just because we know our strike rates on it, and it enables us to do it through our journals. But for example, one of my weaknesses is I don't like holding positions overnight, purely because I just feel uncomfortable leaving it to the Asian session. I feel like that's when we first started trading. Kieran and I went through a period where every single trade we had hit stop loss during the Asian session, and that was very frustrating. I think like that's something I still want to like get over.
I hated waking up in the morning.
Yeah, exactly. Because you wake up and you just don't know where it is, and you check your phone straight away. But I did wanted to highlight this because I'm aware of my weaknesses, and I am trying to like battle it. Even though I just said like we're moving into day trading, if I see a position I'm able to pyramid in, I will leave it overnight because I feel like if it's a strong position, I will. So it's something I will work on, and hopefully by the next time I review my journal, my trading plan, I can change it. Oh, so my frame of mind, that's basically how I want to approach the markets every day. Because I remember, like, when I didn't have a trading plan, I used to come home from work, sit down, and just chase setups, and I'll be there going into setups I'm not prepared for. Whether I was just tired or whether I just felt like I was missing out, it's something I was like, all right, if I need to write this down, so I'll make sure I'm accountable for it, and I don't do it going into the future. Same with like when I'm not feeling well or when I'm just tired in general. I don't want to be sat here trading because it will impact your performance. As like silly as it might sound, it will, because you're just not going to be 100% there. And when you're trading, as I said before, these massive banks and these massive hedge funds, you need to be there. You need to know what you're doing. So annual trading goal, I've written here. I've got So annual, monthly, and daily trading goals. I'm not keen on setting targets, just because this is not a place where you can chase targets, because every trade you have is different, and I feel like sometimes it does limit your performance because you're always chasing that target and you're always limited by it. So I've kind of like flipped it on its head and wanted to approach it from a different way. So like my annual trading goal is to develop my own strategy through like the things I've journaled. It can be like a whole new system or like marginal tweaks like the SFPs or the key levels, where I'll be able to develop my own set of rules and trade it solely. So like when I'm journaling, or even when I'm backtesting, like I've had a few backtests recently, and I found this weird price action movement. I started calling it no man's land, where I've just started taking screenshots and just seeing like how price reacts to like those. It's our price reacts before levels, because there has been a pattern, especially in EURUSD. So hopefully by the end of the year, I'll actually be able to like share with you guys what I've found, whether that is actually a proper strategy. So you might not want to have like annual goals as per se, but definitely have like daily goals and weekly goals, which I'll talk about now. So my monthly goal, what was that? I forgot about this. So monthly goal, ensure my trading journal is filled in every week. If I have like 2-3 trades in a day, most of the time I'll sit at the end of the day filling them in. Unless it's a Friday, I might be doing some on a Friday, so I'll journal my trades over the weekend. And the main goals for the months are, I feel like that's the main goals in trading: cut your losers quicker, identify setups better, and enter at better points in the market, as well as holding my winners for longer. So identifying setups, that's something Key and I are both limited by focusing our attention only on like a few pairs. We're not watching as many pairs as we did before. So we're really sticking to about 5 or 6 pairs at the moment, where we just know we're not going to miss setups, whether that's like through setting alerts or just when you observe 5 or 6 pairs and you leave for the day and you come back, you know what's been happening in those markets. Whereas if you observe 10 or like 15 at one point, it's hard. I'm not saying like it doesn't work, because it does work for some people, but that's just like my monthly trading goal. And obviously hold on to your winners for longer. That's probably the key aspect of trading journals. So that's something I look to do every month, like going in. And just that your daily trading goal is really, you want to stick to your plan. You want to go in there and trade mechanically. So as well as obviously performing at your best, and just not let things get into the way, not be emotionally compromised, because you just don't want any distractions like when you sat down when you're trading, because it can add up and you can like miss those moves, miss those candles. Like it takes 10 minutes. We saw on Monday, like it took 10 minutes for what was it now? I think it was either pound yen or euro yen to literally move about 100 pips up because of the vaccine news. So if you miss that, then you'll be flabbergasted. You wouldn't know what's going on. So what else we got here? Markets traded. See that I just mentioned this. This is cut down now. This was before. So now we mainly look at Euro USD, cable, pound yen, euro yen, and then gold. Is there something else? I can't remember. If there's something else now.
That's all I'll trade.
Yeah.
I feel so much more relaxed doing that as well.
Oh yeah, you just feel like you can focus on those pairs, can't you?
Mm.
Time frames. So predominantly trade on 1 hour, as well as use D1 bias and daily time frames for Confluence. So if you hear, I want to do a webinar on like solely based on D1 bias because it's very useful just to like determine where you think the pair is going to go for the next day. And I need to add to this the new 1 minute strategy we're going to use as well, where you want to know what time frames you're trading. So you just don't run away. I feel like you guys like know this anyway, but it's some of these things will be obvious, and you feel like, oh, this is obvious, but it's just you need it written down just so when you progress and you feel like you want to change something, you can easily change it, and you always know it's there. Trading tools. This is just personal to me. So we use IC Markets, and then when we on FTMO we use the LMAX data feed. And then this needs to be updated as well because I've got many more expenses now. The data from Financial Source as well as Trading View. Like you guys won't have like many trading tools, so it's just something personal for me. So position size and risk management, huge point to mention. My risk. So you wanna have a risk per trade, your maximum risk per trade, and your maximum risk per day. They should say per day. I don't know what it says per trade as well. So under no circumstance will I risk more than 3% on any setup ever, purely because, well, it's just not beneficial for me, and I can hit three losers with 3% risk, and that's still under 10%, which never happened to me, and I hope it's not going to happen moving forward. But 3% is something I'm not going to risk on all trades. I'll show you the breakdown in a minute. We'll get onto it. But most of the time, it will be SFPs, and hopefully one day it will be the new strategy we're doing as well on high time frames, not on the 1 minute. Because if I risk 3% on the 1 minute, and then my maximum risk per day is 4%, I can only trade 1% for the remainder of the day on the 1 minute, and I can have many setups in that same day. So it's just not beneficial for you. So we'd break down our risk, or sometimes when we trade levels. So I posted a picture on Instagram tonight where I said I'd enter at different points. So just because I want to manage a specific area of the actual chart. So I'd enter maybe on the last swing, and then I'd have another entry on the bottom of the first candle, just so I'm working a specific area, and collectively I'm only risking 2% on the trade, rather than going in at 2% straight away and that trade going to my stop loss. So it's just like a smarter way of approaching it. And also you want to specify what you're going to do if you do lose that 4% for the day. So whether that's demo trade until you make that 4% back, or demo trade until you feel comfortable again, live trading, that's actually very important, just so you know when you do reach that point, you're not revenge trading and you're not trying to get into the markets again, trying to make that money back, because that's how you get killed, basically. That's how it just will catch you. So mine is, if I reach three losing trades in a row, I'll step off the markets and analyze my journal to where I've went wrong, and just demo trades until I've got 2 consecutive winners. On the new trading journal, we've got what's it called? Syntally. Yeah, Syntally, where you're able to track what you did wrong on the trade. So it will be easy for you just to track what you've been doing wrong, and track how many losing trades you had in a row, just because let's say you entered in the wrong position size, or you entered too early. So this is my risk allocation. So SFPs 2%, unless it's a pitch perfect ATR, we'll talk about advanced SFPs in another webinar, but I'll look for an 80 swing into my SFP, then I will trade 3% because looking back at my journal once again, that's something I back tested. That's something I know if I risk 3%, I can't, there's different strike rates for different pairs, but most of the time the probability will be in my favor, so I will win that trade. And then level trades, if it's not a free touch level, would be 1%. As well as the QM, so the QM fractals, a new strategy that's on the hourly for now, so 2% on hourly, and then we're looking at 0.5% and 1% on the 1 minute, just as we still forward testing it and getting to know the strategy. So, any questions for now? That's basically like the basis of a trading plan, and then whatever comes next is just like the strategy in general.
What does DB mean? Free touch level with
Daily buyers.
Ah, gotcha.
Yeah. So what works the area is where I mentioned this like just a minute ago. Let me show you on the chart. So here I know the 61 fib, I'm not going to draw on now because I can't be bothered, comes in about here. So I will be looking at, oh sugar, this area there as my potential area for doing business. So I said, as we cut through the 61 fib, I'm not going to have a whole 2% in the market right there if I risk 2% on the level trade, purely because I know it will go, most of the time it will cut through that. Like you rarely see price respecting 61 to the pip, most of the time it will cut through. So I'll have 1%, let's say, there at the last swing point, as well as maybe 1% underneath the thrust candle. So where the lowest point of that thrust candle is there. That's something I found is beneficial for me. Once again, you might want to enter the 2% in the center of the move on the actual level. Recently, when I've been going through my journal, I found it's better to sometimes work the area because price might actually like go even lower here, and then you're just more protected and you still stay in the trade rather than going to trade and then the next hour hitting your stop loss. Another one is what will you do when there's fundamental news? So I'll remove my trades most of the time like half an hour or make them risk-free, but I hate making trades risk-free. So if I analyse the impact of the news, and recently there hasn't been many strong news apart from any developments with Brexit or Corona, I'll look at the news and be like, all right, what do I think is going to happen? Is it potentially going to stop me out? This was a much bigger problem like a few months ago when Corona wasn't so massive, but it's something you need to consider simply because you don't want to be stopped out of fundamentals. You want to know what fundamentals are driving the markets, and you want to know when will that move stop. So yesterday, I don't know if like many of you saw, we've had huge moves in the markets all day based on because of the vaccine. Gold was dropping for like what 5 hours straight, I think, and then when Key took that SFP trade, that's when it stopped. So you want to know how the fundamentals will react to the markets. Like he was comfortable entering that trade because he knew most of that move was over. The markets have died down. The markets have reacted. The markets have priced it in. So it's just a matter of time. But that's something you're not going to know at the start. Like you'll develop as you trade more.
Yeah, because I guarantee that gold trade, as an example, get it up on your screen a sec, Chris, and show the H4 candle. Because it's a good example of us having back tested the SFPs and knowing that people are exiting their orders when they see this candle.
Yeah, exactly. That's not going to load now, is it? Bastard. Hang on. Let's get on here. Oh yeah,
What's
not
wrong
many
with
people.
trading view?
I don't know. It never does this, and all of a sudden, I'm on a call and does that. There we go. I'll do this. Oh shit. Oh, there we go.
Yeah, whack it on a 4 hour because it was a 4 hour trade. So basically, you know, I used to hate trading gold. Well, I've started. What I've noticed is this is just a little snippet, not to do with trading journals and trading plans, but what I've noticed is H4 SFPs. So on the 4 hour SFPs, there's a very, 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 very high chance of success. That's why I stood in front of that candle, because I knew that. I've looked at it, I've tested it. I know the success rate of a H4 SFP on gold. But if you look at that disgusting candle,
$90 drop, that is.
not many people are going to look at that and think, oh, I'm going to long this. But because you know that there's a very high chance of that. Like, for example, the ATR, we know the ATR has been breached. You guys know the ATR has been breached because you use that indicator.
Yeah.
So if you know these things and you have a plan to kind of back you up, you'll stand in front of that scary mother.
Yeah, look, there's ATR on the low. Look how much it's breached it by, and we don't trade in the direction of the ATR. So that's another confluence to actually for the SFP, because it will go back in there, and it did just that.
And do you know what I did as well? I went to sleep because I had confidence in the SFP. So I went to sleep. I woke up this morning and I thought, oh crap, I wonder how gold's doing. I opened my chart and I was like, yeah, there we go. Easy does it.
It's when you open it and it's not still running, you think, oh crap, that's definitely it.
And you see the balance and you're like, oh.
But when it's in the blue, you're like, whoa.
That's what I did. I don't know if I ever told you guys. I feel like I did, but one of the reasons that I didn't trade gold was when I was away in Cornwall on my live account. I miscalculated I didn't miscalculate my lot size, but I was rushing to leave the house because we was going out, and I entered 10 times the amount of what I wanted to, and it hit stop loss while I was out, and I lost. And this is only going back a few months ago, and I lost 10% of my live account. So I just stopped trading gold, and now I've come back to it because I'm like, right, I've had time off from gold now. I need to improve like my strike rate.
Yeah,
I've come back, and that was my first gold trade I've had since I've been learning about it again. And I was just like, you know what, there we go.
We'll definitely be able to like nail it down again.
That was my worst trade of all time. That 10% loss I took was it. Like, apart from my very first trade, I traded a one lot on like a £300 account when I first started trading, and I didn't have a stop loss, and I left it overnight. I went to sleep because I didn't know what a one lot was. I woke up in the morning, I was £150 in profit, and I was like, oh, this trading shit's easy, man. And then the next trade, I lost like 8 quid, and I was like, oh, actually, okay, maybe not. But that could have I could have lost 1,000. It could have ruined my life. It literally could have ruined my life. That trade would have. If that had gone against me, they would have margin called me, but the broker could have like charged me like thousands and thousands of pounds.
Yeah, because that regulated.
Naughty boy I was.
Boy, oh boy.
But yeah, we digress anyway. Carry on, Chris.
So we talked about entering the trade, as in trade manage. What's it called? Before taking the trade. So this is another 3 aspects you want to include before entering the trade. What are you going to do during the trade and like during the exit of the trade? So things I want to bring to attention probably is the evolving R, which is something we talk about all the time as well. When you're 90 pips in profit and you want to get to 100 pips, you're not going to move your stop to break even because you will lose 90 pips. That's 90 pips in profit. You're there. So that's something we always stress and make sure you're aware of when you do analyze your trades. Also, when you're managing trades, for example, we have specific things to look for when level trades are invalidated and when SFPs are invalidated. So for me, the SFP will be invalidated when the swing I'm trading closes below the previous swing. It doesn't have to take out the SFP. For Kieran, like it does, like it has to close below the last swing point. For me, it doesn't have to close below the previous one, and that's just something discretionary for us. Something we've like just back tested differently and just found going like journaling ourselves, just something that works for us. And you will have different things like for different trades and different strategies. Another one is if the trade hits your level, hits your order, but you haven't been filled, I will not chase the price. I will just leave that trade. That trade's gone to me because I didn't enter at the center of the move. So like Kieran's talked about this as well. When like price has gone into his level 5 or 6 pips, and hasn't traded him, you might think, well, why didn't you just enter? But if we're not actively observing that trade, and then when you go look back into it, it might be 10, 15 pips from your target now. So everything about the trade changes. Your R will change, your stop loss placement will change, and the center of the move has changed as well. So it changes the whole dynamic. So you just want to be aware of how you're going to monitor your trades and have a set of rules, defined set of rules of what you're going to do during when you're watching your trades. These aren't really major points because I don't really add to trades, and I've developed my own like market close routine. So at the end of each day, around 9:30, 10 when we do our market breakdowns, I'll have my own routine where I look at what's happening in the day, how does the economic calendar look in the next day, as well as do like a general D1 scan of all the pairs I'm trading, just to see if there's confluences going to the next day. So if there's a massive bullish engulfing or bearish engulfing on the D1 time frame going tomorrow, I'm like, all right, I'll know this pair will go down the next day. So where do I think it will come? What levels do I think it will hit first before actually going down? So straight away, you go into the next day having a potential idea of where you want to do business at, which is very important because it eliminates that fact of you waiting for that setup to come to you, because you know where it is, you know exactly the place you want to trade at in the market, which is really important because many people just open a chart and be like, yeah, here, yeah, I'll trade from there. Whereas you want price action to come to that place, and when it does come to that place, you'll trade according to your plan. You'll stay mechanical and you'll stay successful, because that's where business will happen. That's where price will go down from. Obviously, it's not going to happen all the time, but most of the time, you'll be able to track it through a journal. And just basically like a final thing I think I want to mention is just like the general market rules you have. So when you get into a setup and it's been like an hour, let's say, remember why you got in the first place. Like, the setup's not invalidated just because you're sat there watching it. It doesn't mean there's like prices doing anything differently than what you thought an hour ago when you entered it. Have defined rules to say, when am I exiting this trade? As I said, we have rules for SFPs. We have different rules for our levels. You need to know specific specific chart patterns or specific time frames as well. So if you're in a trade and the trade doesn't move more than 10 pips in 5 hours, that might be a rule of yours. You might be like, all right, it hasn't had the reaction I wanted, so I'm going to exit position. That could be on SFPs as well. We want a reaction within the first 3 hours of like the SFP forming primarily. And if we don't get that reaction, it might be hard just moving forward, because the move might not actually get to the FTL, or just might not go anywhere. What else have we got here? So it's just like general rules of just spotting. How do I word this? Just respecting the markets in general, and sometimes you just are humbled by the markets because you can enter the perfect trade, just like with all your confluences, you've done nothing wrong, but the markets will just have a different idea. And we know no one has like a 90% strike rate, so don't be scared about your losses, because everyone has them, and it's just how you bounce back from your losses basically. So you want to like have general rules for yourself where you can look at them at the end of the day, or you can just always have at the back of your mind, as I said at the start with the goals as well. Just at the end of the day, we're like, all right, what I've done well today, what I could have done better, but like essentially. And I think that's pretty much it.